everyone, it's Daniel here from Infovest, just keeping you informed on the news and the markets. I want to talk about Canadian real estate prices and Canadian real estate housing, right? Hearing a lot about people talking about that Canadian real estate market's going to crash. RBC is coming out with a basically a report talking about, I think it was RBC, I'm pretty sure, talking about real estate prices to correct itself a lot, and doomsday is here, and etc., right? Now, sure, in probably other places, like for example in US and certain states, you might see that real estate prices really correct, especially when it comes to inventory coming into the market. Now we're seeing also interest rates increase. Canadian Bank of Canada came out with a 100 basis point rate hike, which is basically dampening the demand for people to go out and get a mortgage, especially those millennials who are first-time buyers looking to get a mortgage and buy a home. It's going to be tougher and tougher for them to do so, right? And then on top of that, you have not only this demand destruction, but you have also the supply side, which is keeping prices elevated, right? When you look at current news that came out for Canadians, right, in the GTA in Toronto, the amount of listings that are coming out are actually coming off the market, number one. Number two, the amount of demand for people who are looking for homes, that's also coming down. So the expected sales are coming down, but prices still went up. Home prices still went up. Now, why is that, right? Why is it that the demand has dropped, but the home prices have moved up, right? And it has to do with all this demand and supply curve that we're seeing. And my take is, even though that the Bank of Canada is raising rates, yes, the Federal Reserve also today raised rates by 75 basis point. The goal for the central banks around the world is they want to dampen demand, slow the spending so prices can come down. But that doesn't mean that they can affect the supply side, right? Now, if you look at a place like, Canada, and you look at Toronto real estate prices, Vancouver real estate prices, they've been moving up. They moved up quite a bit, especially since COVID. And the idea of prices coming down would have to be dependent on how much inventory comes into the market. And that's my take. I believe that, for something to really, really go wrong and sour in terms of the real estate prices, unless I'm completely not considering something that I'm completely missing, like a 2008 kind of style of crash. But I think that's less likely to happen unless, and for prices to really correct, unless you have inventory coming to the market. Unless we've got a lot of inventory pushing into the market, then yes, okay, we could see a nice correction in the real estate prices. I'm not saying that prices can't correct itself. Sure, it definitely can. And definitely the higher rates and the higher mortgage rates that are moving up, and the continuous rate hike that the Bank of Canada is doing, sure, definitely, that will dampen sales, that will bring down prices lower, and that will affect the demand side of the curve, right? And that might take time because there's a lagging effect when it comes to raising rates and the markets are tightening. For that tightening to come into the markets and be affected by it, it might take some time. It might be maybe 6 months from now, maybe less, or by the end of the year, right? So we'll probably see the effects of it later. Now, the problem is the supply side, which I keep going back to. When you see supply side and you see all the prices and you see inflation moving up, right? I hear people say, oh, the money printing is the reason for inflation. Not exactly. Yes, that was part of it. But we've been doing money printing for some time. We've been doing quantitative easing for some time. And we've had tough times with inflation since the past decade. It's only now that we see higher inflation, and it has to do with inventory issues, supply side constraints, right? You're hearing with the COVID, with COVID cases starting to rise. China also, COVID cases starting to rise, and the lockdowns. That's affecting the supply chain. That's affecting the supply chain. It's going to affect inventory. It's going to affect the supply curve. And basically, the supply curve is going to shift left, which is basically going to push prices higher when there's less supply. So if there's less supply of homes, inventory, less inventory of basically of homes, then that is the reason why you hear reports in Toronto that sales have decreased, but prices of homes have increased by whatever percentage it was. I think 9% or something like that, probably less than that. Don't fully quote me on that. But the idea is because you have people taking homes off the market also, inventory issue, less supply, sure, that's going to push prices higher. So in order to bring the prices down, you want to see the inventory levels kind of move up higher. And if it can move up to a drastic amount, then yes, the millennial who's looking for a nice price decrease, they may get it, or a simple correction, they may get it from an increase of higher supply. So that's a possibility. And now I want to share with you a statistic, and I'll see if I can post a link in the description for you. And this is a chart on the Canadian household and mortgages. And this comes from Alpine Macro, and the source is Bank of Canada Financial System Review 2022. I don't know if you could see it here. Yeah, it might be kind of blurry, but anyways, I will post a link in the description. But basically what it is that they surveyed basically all the households in Canada, and they looked at basically people who own a house, people who own a house with a mortgage, people who own a house without a mortgage, and the renters. So when you look at the distribution, basically 37% of Canadians are basically renters. Owners who own a home but without a mortgage, no mortgage, 28%. And owners with a mortgage, people who own a house with a mortgage, basically makes up 35%. Very small segment, right? 35%. So if this is correct, and if I'm reading this correctly, right, about 65% of the people out there don't own a mortgage. They're either renting or they own a home without a mortgage, so they own their home fully. And for a price to decrease and for them to panic out of their house and sell their house, very less likely that they're going to do it, that the 65% of the people are going to do it, right? The renters will probably still continue to rent. Sure, if rent increases, they may shift elsewhere. But they're not going to go and most likely not going to go and buy a home if they're already having issues with their rent and paying that. The owners who own a home, don't have a mortgage, right? See their prices coming down. Very less likely that they're going to panic sell unless maybe they're looking to retire and they want to get the hell out of their city and move somewhere else. Sure, maybe that might happen, right? But very less likely for them to panic as well. Now you've got a small segment. Okay, the people who own the mortgages. What about them? The 35% people, right? So when you look at them, about 71% are on a fixed rate and about 29% is on a variable rate. So again, that 35% that's there, majority of them are on a fixed rate. So even with higher rates, it's not going to cause them to panic out, right? Someone who owns a home looks at the house for not just their own investment, but to live in it for years. So is that really, is the higher rates and the demand side really going to cause panic selling? I don't think so, right? And when you break down, again, go smaller. So 35% of the people, of owners who own a mortgage, right, and own a house, and out of this 35%, 71%'s got the fixed rate, 29% has the variable rate. And then you look at the 29% of the variable rate, basically it's showing that the fixed payments that they have, about 23% has these fixed payments, and the 6% has variable payments, meaning that the people who are on variable payments, the 6% of them, are going to feel the pinch of higher mortgages and higher rates. right? So if this is right, if I'm reading this correctly, what this basically tells me is that you have a very small segment of Canadians out there who are gonna, sure, yes, they're feeling the pinch of inflation and higher prices, but very small segment of them, and take that 35% and even a smaller segment of that very small sliver segment will probably feel the pain and may panic sell, which means the rest of that 35% who own a mortgage and the rest of the people who don't own a mortgage are not going to panic sell. So if there's no situation of a panic sell of home prices in Canada, I'm talking about Canada. I'm not sure about the other states out there in the U.S. I know there's a data statistic about Houston having inventory levels skyrocketing, and sure that is very dangerous because you could see prices move down, right? But specifically in Canada, right? Will we see panic selling that could lead to a 2008 type of crash style real estate correction? And I don't see that right now. I just don't see that. So I don't think people will panic out. The only variable I see for prices to move down is the supply side. And the supply side meaning putting more inventory into the market. So if the government can do that, right? We don't know. They make a lot of promises, but we'll see. We'll see what they say, what they do. But if the government can really push these construction companies and incentivize build homes, build homes, build homes as much as they can, then sure, you might see the prices level off and may come down a bit, or maybe not. We may not see that, and prices to stay where it is right now. Maybe a small correction, and then we rebound once again. Right? Which means, pretty sad, the millennials looking for that massive dip, they may not get it. So let me know what you guys think in the comment below. Let me know if you think that, I'm wrong. Let me know if you think that prices are going to correct itself in Canada, whether you think it's going to be really, really ugly, and or I'm just simply missing something right now. But right now, when I look at real estate, and real estate is also considered to be a hedge against inflation, right? With higher prices, it's a good asset as a hedge against inflation. Should see real estate do well and not really correct itself. So let me know what you guys think. Leave a comment below, and I'll see you guys around. Thanks. Bye.